Imagine, something that nobody else on earth knows yet. You have 15 minutes and you know that in 15 minutes the price of oil is going to crash. What do you do? If you are a normal person, the answer is nothing because normal people do not get 15-minute warnings before the president of the United States makes announcements that move global markets. But on March 23rd, 2026, someone did 15 minutes before Donald Trump posted on Truth Social that the United States and Iran had held, in his words, very good and productive talks, and that he had instructed the Pentagon to suspend all attacks on Iranian power plants for 5 days. Someone placed a bet of more than $500 million that oil prices were about to fall. Oil prices fell immediately, massively. The trade made money. Most people assumed it was a coincidence. Then it happened again. On April 7th, in the hours before Trump announced a 2-week ceasefire with Iran, an announcement that sent oil prices crashing by 15%, traders placed a bet of approximately $950 million that oil prices would fall. Oil prices fell 15% in a single session. Then it happened again. On April 17th, 20 minutes before Iran's foreign minister Abbas Araghchi posted on social media that the Strait of Hormuz had reopened to ship traffic, a waterway that carries roughly 20% of the world's oil supply. Traders placed $760 million on falling oil prices. The Strait announcement hit, oil fell, the trade made money. Then again, on April 21st, 15 minutes before Trump announced an extension of the ceasefire, this time with no deadline attached, traders made a series of bets totaling $430 million that oil prices would fall. Oil fell. The trade made money. 4 announcements, 4 massive bets, all placed minutes before each one, all on the same side, all profitable, total value across all 4 trades. $2.6 billion. Now, if you saw one of these trades, you might say coincidence. If you saw 2, you might say lucky. But 4 times, same pattern, same direction, same window of minutes before a presidential announcement. There is a word for that, and it is not coincidence. Today, we are going to follow the money through every single one of these trades. We are going to look at who the investigators think might be behind them. We are going to look at what the law says about it. And at the end, we are going to look at the one detail in the story that changes everything. Something that happened the day after the very first trade, something the White House did quietly, something almost nobody reported. But first, let's understand what oil futures actually are, because this story only makes sense if you understand the weapon that was used. An oil futures contract is basically a bet on where the price of oil will be at a future date. If you think oil prices are going to go up, you buy futures contracts. If you think oil prices are going to go down, you sell them. This is called going short. And if you are right, you make enormous amounts of money very fast. Now imagine you are watching a war unfold between the United States and Iran. The Strait of Hormuz, the narrow waterway between Iran and Oman that carries 1/5 of the world's oil supply, is being threatened, blocked, and reopened based on announcements from presidents and foreign ministers. Every single announcement moves oil prices by 5, 10, 15% in a single session. Oil briefly surged above $100 per barrel during the conflict. In that environment, knowing what the announcement will say even 15 minutes before it goes public is worth hundreds of millions of dollars, maybe billions. So let's go through each trade one by one because the details are everything. March 23rd. The United States and Iran have been at war for weeks. Oil prices are elevated, tensions are high. Nobody knows publicly what the status of the negotiations is. At a specific moment that morning, Exchange data reviewed by journalists showed that traders placed more than $500 million in short positions on oil futures on the CME Group and Intercontinental Exchange platforms, two of the largest commodity exchanges in the world. Then, 15 minutes later, Trump posted on Truth Social. He said he had ordered the Pentagon to suspend all attacks on Iranian power plants for 5 days while talks continued. Oil prices dropped immediately. The $500 million bet made money. The data was later obtained directly from the London Stock Exchange Group, which operates the exchange infrastructure that recorded the trades, April 7th. Oil prices are still elevated. The war is still active. There is no public indication that a ceasefire is imminent. Then, in the hours before Trump announces a 2-week ceasefire, traders place approximately $950 million on falling oil. According to Senators Elizabeth Warren and Sheldon Whitehouse, who wrote a formal letter to the Commodity Futures Trading Commission demanding an investigation, there was no public news preceding the announcement to explain the price movement. No leaked report, no press briefing, nothing. The $950 million bet was placed into what looked like silence, and then the ceasefire came and oil fell 15%. April 17th. This one is different from the others because this time the announcement did not come from Trump, it came from Iran. Iranian Foreign Minister Abbas Araghchi posted on social media that the Strait of Hormuz had reopened to ship traffic. 20 minutes before that post, traders placed $760 million on falling oil prices. Congressman Richie Torres separately demanded a congressional investigation specifically into this trade because if the first three trades raised the question of whether someone inside the US government was leaking information, the fourth trade raises a different question entirely. Was someone inside the Iranian government also trading on what they knew? April 21st. By now, investigators are already watching the markets closely, and still. 15 minutes before Trump announced the ceasefire extension with no deadline, $430 million in bets on falling oil appeared on the exchanges. The pattern held one more time. And then in May, a fifth event surfaced. More than $700 million in oil futures traded 1 hour before a news report that Washington and Tehran were nearing a final deal. According to Reuters and data reviewed by market experts, the total exposure across all identified events may have reached as high as $7 billion when you count the full range of fuel derivatives involved, including Brent crude, West Texas Intermediate, European diesel, and U.S. gasoline futures. $2.6 billion in the four core trades under active DOJ investigation, $7 billion when you look at the full picture. Now let's talk about who is being investigated, because this is where the story gets complicated. The Department of Justice investigation is being led by the U.S. Attorney's Office for the Southern District of New York, the same office that has prosecuted some of the biggest financial crimes in American history. They are working alongside the Commodity Futures Trading Commission, the federal regulator responsible for overseeing derivatives markets. The Chicago Mercantile Exchange is conducting its own internal review. No charges have been filed. No traders have been publicly identified. But the Wall Street Journal reported the names of at least 3 firms whose trades are being examined. Cube Research and Technology, a quantitative trading firm. TATSA, the trading division of French oil giant Total Energies. And Forza Fund Limited. On March 23rd alone, exchange documents reviewed by the journal showed that Cube made $5 million, TATSA made $200,000, and Forza Fund made approximately $10 million. Small portions of the $800 million that moved that day. These firms have not been accused of any wrongdoing. Cube told the journal that its trading decisions are entirely model-driven and not based on geopolitical announcements. TATSA said it was unaware of any investigation. A representative for Forza could not be reached. Now, let's talk about who could have had this information, because this is the question at the center of everything. Think about it this way. Imagine you work in the White House and you know that in 15 minutes, the president is going to post something that will crash oil prices by 15%. You cannot trade on that yourself. it would be obviously illegal. But what if you told a friend? What if that friend told another friend? What if somewhere along that chain, someone with access to a trading account placed a $500 million bet on the market moving in a direction they already knew it would move? That is the theory under investigation. The legal term for it is misappropriation of material, non public information. According to Senator Warren's letter to the CFTC, the pattern raises serious questions about whether there has been recurring misappropriation of government information and whether individuals inside or outside the government acted on it for personal financial gain. The categories of people who would theoretically have had access to Trump's announcements before they were posted include senior White House staff, National Security Council members briefed on diplomatic negotiations, Pentagon officials aware of military orders, and potentially counterparts on the Iranian side who knew their own foreign ministers' posts before they went live. Now, here is the detail that almost nobody reported. On March 24th, 2026, one day after the first suspicious trade cluster on March 23rd, the White House issued an internal memorandum. The memo warned administration staff against using non-public information related to Iran policy for personal financial gain. One day after the first trade. Think about what that means. Within 24 hours of the first $500 million bet, someone inside the administration understood what had happened, clearly enough to issue a written warning telling staff not to do it. The memo did not say, "We are investigating whether this happened." It said, "Do not do this," which means the White House knew the risk was real, which means someone somewhere in that building either did it or knew someone who did. And then the second trade happened anyway, and the third, and the fourth. The memo is now a piece of evidence in the DOJ investigation because it establishes what the administration knew and when. There is also a parallel story running alongside this one, and it shows that this pattern did not start with oil. In January 2026, U.S. Special Forces carried out an operation to capture Venezuelan President Nicolas Maduro. A soldier named Gannon Ken Van Dyke was part of the planning team. He had access to classified information about the operation before it happened. In the hours before the raid, he placed bets on a prediction market platform called Polymarket that Maduro would be captured. He made $409,000 overnight. He was arrested. He is now charged with unlawful use of confidential government information for personal financial gain. He bet $33,000 and turned it into 400,000. Someone in the oil trades bet 500 million and turned it into significantly more. Same pattern, same crime, different scale. As of July 2026, no charges have been filed in the oil trades investigation. No individuals have been publicly named. The DOJ and CFTC have declined to comment. The accounts that place the trades remain anonymous. But here is the detail that stays with you. Pension funds, endowments, mutual funds, ordinary retirement accounts. These institutions hold commodity exposure through the same futures markets where these trades were placed. When someone trades with advanced knowledge of a government announcement, they are not just making money, they are taking it from somewhere, and the somewhere is the other side of the trade, which is often the retirement savings of ordinary people who had no idea the game was rigged before it started. So I want to hear from you. If these trades are proven to involve leaked government information, who do you think is responsible? Someone inside the White House? Someone on the Iranian side? Or someone further down the chain that we have not even heard of yet? Let me know in the comments. And if this breakdown was useful, like the video, subscribe, and turn on notifications. We are going to keep following the money. I will see you in the next one.